Smart money moves in silence. Big holders do not announce their plans on social media. They do not chase fast-moving green candles. Instead, they act with discipline when others are guided by fear. Right now, on the quiet ledgers of the blockchain, a story is unfolding. While many retail traders are watching prices fall and feeling the sharp sting of uncertainty, large wallets are making careful, deliberate moves. They are not selling into the panic. They are not waiting for the absolute bottom. In the shadows of the market's loud anxiety, they are quietly accumulating. These are the whales, and their movements are often the first sign of a turning tide. The term smart money often sounds mysterious, as if it belongs to a secret club of financial wizards. In reality, it is a simple concept. Smart money refers to the capital controlled by well-informed, experienced, often institutional investors. These are not impulsive traders who buy on hype and sell on fear. They do their homework. They analyze market structures. They study technological fundamentals. They track macroeconomic trends. Decisions rooted in deep research and risk management. Patient hunters, waiting for the perfect moment to strike. Smart money thinks in months and years, not hours and days. When the crowd is euphoric, they take profits. When the crowd panics, they build positions. Data over drama, volumes, wallet growth, dev activity, network usage, signal over noise. To understand why smart money is interested in Kaspa, we must first understand what it is. Stripped of jargon, Kaspa is a digital currency designed to be incredibly fast and highly scalable. Old chains are single-lane roads. Congestion means waits and higher fees. Kaspa solves this with a block DAG, multiple blocks created and confirmed at the same time. It is like upgrading to a multi-lane superhighway where traffic flows in parallel. Parallel processing keeps the network fast under heavy load. For users, confirmations in seconds, not minutes or hours. As convenient as a card tap, with very low fees. Ideal for real utility. Micropayments, affordable apps, and low-cost transfers become practical. Smart investors see infrastructure that tackles the scalability trilemma. Speed, security, decentralization. Focused on utility over hype, the kind of foundation that attracts long-term capital. The first and most compelling piece of evidence comes from on-chain data. The blockchain is a public ledger. Anyone can observe the flow of funds. While identities are anonymous, wallets are not. We can see whales making significant moves. During the recent downturn, a distinct pattern emerged. A steady flow of Kaspa into long-term addresses. Classic accumulation. Medium to large buys executed over days and weeks to avoid price spikes. Like a submarine beneath waves, visible to those watching on-chain sonar. Large wallets up, exchange balances down. Coins moving to cold storage signals intent to hold. In panic, retail deposits to sell. With Kaspa, larger cohorts are withdrawing. Whales absorb fearful supply, building positions at favorable prices. This pattern is on-chain and undeniable. Follow the money. Right now, it flows quietly into Kaspa. The second piece of evidence can be found on the price chart itself. Experienced investors identify support, accumulation zones, where buyers historically emerge. Selling pressure meets a wall of buy orders, descent slows, stabilizes, often bounces. For Kaspa, zones are visible, levels where strong rallies began. Smart money places limit buys inside these ranges to create demand. Think of it as a safety net woven by disciplined investors. The current dip has returned to a well-established support. Buying is palpable. Not chasing knives, waiting for predefined value. They do not need the exact bottom. They accumulate within high probability ranges. Rising buy volume at support confirms a defended level. These golden pockets are clear invitations to act with conviction as the tide turns from fear to confidence. Beyond on-chain data and chart patterns, the most fundamental reason is technological superiority. In the long run, value ties to utility and underlying tech, not hype. Kaspa's block DAG is a significant leap. Ghost DAG organizes blocks for speed and security. 1 block per second today, roadmap toward 10, eventual 100 blocks per second. High throughput supports a massive ecosystem without congestion. Apps become fast, responsive, and inexpensive for users. Proof-of-work heritage with high-performance design, speed, security, decentralization. Not a meme or marketing. Sophisticated engineering, working today. Smart investors recognize the edge. Unique, powerful tech survives and thrives. They see Kaspa as a foundational layer and buy dips while others sell. Technology is the engine under the hood that drives long-term conviction. There is a simple but powerful mantra that guides successful investors through volatile markets. Accumulate when others hesitate. It is the essence of contrarian investing, courage to act amid fear and uncertainty. Hesitation is natural. Fear can paralyze even experienced traders. When it feels safe again, the best opportunities often have passed. Accumulating during a dip with dollar cost averaging smooths your entry and reduces risk. If price falls further, your next buys lower your cost basis. Smart money views dips as windows of time, layered buys within target zones. Control your actions. Buy when uncomfortable. Have conviction. Trust fundamentals. The crowd's hesitation fuels the smart investor's engine. Every panic sell is someone's long-term buy. To fully appreciate Kaspa's appeal for accumulation, zoom out. Clear monetary policy with a maximum supply, fundamentally deflationary. Predictable emissions avoid supply shocks and build trust, sound money. Today's consolidation and fear create exaggerated swings that scare off the inexperienced. Low liquidity gives well-capitalized buyers a chance to accumulate without moving price. Fast blocks and low fees drive real organic use beyond exchange transfers. Developers are shipping, daily transactions increasingly app and peer-driven. Smart money invests in utility and durable infrastructure, not pumps. Sound money principles plus superior tech can make Kaspa indispensable over time. Whales buy not to double tomorrow, but to own what the future demands. Let us end with a clear, hopeful image. As the storm subsides, harsh red lines give way to calm stability. In the center of this piece, Kaspa sits, emitting a quiet, steady glow. Not the flashy light of a meme coin, a deep, golden luminescence. Powered by tireless developers, growing user activity, and the quiet conviction of smart money. The market will recognize what whales already see. Kaspa's tech solves a real problem. As builders and users join, value grows organically. Accumulate when others hesitate, position ahead of the value curve. The silent movement of large wallets, defensive key zones, and undeniable tech. One conclusion. The dip is a window of opportunity. The market will move again, and calm conviction may be rewarded.